Welcome to Informed Investor. Amid rising tensions between India and Pakistan, defense stocks have once again taken center stage and have surged into the spotlight. As geopolitical tensions escalate and national security needs intensify, defense stocks have quietly emerged as one of the most attractive segments of the Indian stock market in 2025. Just to put things into perspective, defense stocks have added a remarkable 1.2 lakh crore to their market capitalization in just the last 12 trading sessions, reflecting strong investor confidence. Most defense stocks have experienced a remarkable rally, with notable names generating substantial returns. Bharat Electronics, Paras Defense, Mazagon Dock, and several others have witnessed an impressive rise, significantly outperforming broader market indices. With multi-bagger returns in PSU defense majors to expanding order books and government policy tailwinds, the momentum is undeniable. Now, adding to this buzz, HAL announced its Q4 FY25 results yesterday, and despite mixed numbers, the stock surged by 2.5% today. So what's driving this rally? Let's break it all down. HAL is basically India's champion for aerospace and defense. HAL is a government-owned company and acts as the primary designer, developer, and manufacturer of a wide range of defense equipment for the Indian Armed Forces. This includes fighter jets, helicopters, drones, and various aerospace systems. Additionally, HAL enjoys a near monopoly in the domestic military aircraft market, backed by strong government support, extensive technical expertise, and a well-established infrastructure. Now let's dive into HAL's recently announced Q4 FY25 results. At first glance, the numbers might seem somewhat mixed, but there's more to the story than what meets the eye. HAL reported a net profit of 3,977 crore for Q4 FY25, which represents a 7.7% decline compared to the 4,309 crore in the same quarter last year. Revenue from operations also saw a 7.2% decrease to 13,700 crore from 14,769 crore year-on-year. Despite the year-on-year dip, sequentially, the net profit more than doubled, rising 176% from 1,440 crore in the previous quarter. What's particularly impressive is HAL's operating profit margin of 39%, which substantially exceeded market expectations of 27.4%. For the full financial year of FY25, HAL reported a 9.7% increase in consolidated net profit to 8,364 crore and a largely flat revenue at 30,981 crore compared to FY24. The company also declared a first interim dividend of 25 rupees per share for FY25. The market responded positively to these results, with HAL shares rising about 2.5% on the day of announcement, reflecting investor confidence in its long-term prospects despite the mixed quarterly performance. But on a larger note, why are defense stocks surging so much? The recent rally in defense stocks is driven by multiple factors. The Government of India's sustained push for indigenous defense manufacturing under the Make in India and Atmanirbhar Bharat initiatives has been a major catalyst. The interim budget of 2025 allocated Rs 6.2 lakh crore to the Ministry of Defense, with over one-third marked for capital expenditure aimed at modernizing the armed forces and boosting local manufacturing. Following the Pahalgam attack and Operation Sindoor, India is expected to accelerate its defense modernization program. This includes increased orders for missiles, drones, surveillance technology, and other advanced defense systems. India's defense exports rose 12% in FY25 to 23,622 crore, with key exports including BrahMos missiles, Tejas aircraft parts, and drones. The Ministry of Defense aims to boost defense exports to 50,000 crore by 2029, a 34-fold increase from the 2014 levels. The success of Operation Sindoor, which demonstrated India's indigenous defense capabilities, has reinforced market confidence in defense companies. This has led to sharp rallies in stocks like HAL, Bharat Electronics, Bharat Dynamics, Mazagon Dock, and several others. Several PSU defense stocks have delivered multi-bagger returns recently, attracting more investor interest, fueling the rally. So what's next for the defense sector? The Indian defense sector is poised for sustained growth, driven by continued capital expenditure and policy support for indigenization. Focus on AI-driven systems, drones, advanced avionics, and next-gen aircraft. Then expanding global footprint with increasing defense exports. Ongoing and upcoming projects like the Tejas Mk1A, Su-30 upgrade, and new helicopter programs. Delays due to government procurement processes and high receivable days remain risks. For investors, the defense sector offers a compelling growth story backed by national security imperatives and government trust on self-reliance. However, diversify and don't overexpose and balance your portfolio with stocks from other industries. Now let's shift focus to another company from the paint sector, Berger Paints, and focus on its Q4 FY25 earnings. Founded in 1760 by Louis Berger in England, Berger Paints entered India in 1923 and has since grown into the country's second largest paints company. Headquartered in Kolkata, it operates 29 manufacturing facilities across India, Nepal, Poland, and Russia with a distribution network of over 64,000 dealers and retailers. Today, it ranks as the fourth largest paints company in Asia and the seventh largest decorative paints company globally. Berger Paints offers a comprehensive portfolio that spans decorative paints, industrial coatings, construction chemicals and waterproofing, automotive coatings. The company is a leader in protective coatings in India and has a technical collaboration with global giants like DuPont and Nippon Paint and advanced automotive and industrial coatings. Through its journey, Berger Paints has steadily expanded its footprint in the Indian market, with its share rising from 18.9% in FY22 to an estimated 20.3% in FY25. Now let's jump into the numbers. Revenue grew 7% year-on-year, driven by strong volume and value growth along with market share gains. The decorative segment saw high single-digit volume growth and sequential value improvement, supported by a better product mix and marginal price increases. Construction chemicals, waterproofing, and protective coatings maintained strong demand across markets. Automotive, industrial, and powder coatings recorded stable to muted growth, reflecting mixed performance across smaller segments. Speaking about margin expansion, strong operating margin along with favorable raw material trends, improved mix price increases, and overhead reductions have boosted EBITDA. Operating margins sustained at the higher end, resilient to pricing, raw material, and currency fluctuations. So what's ahead and the future outlook for Berger Paints? Decorative and rural demand are expected to improve, supported by tax incentives, easing inflation, and a favorable monsoon. Value growth is expected to pick up as the impact of earlier price cut fades and protective coatings to benefit from the increased government capex. External risks loom like the geopolitical tensions and currency volatility remain a watch point. Finally, let's look at today's important market updates as usual. Asia Pacific markets fell on Thursday because there were no new updates to guide investors after some good news earlier about the US-China trade talks. The Indian market also showed a similar mood and opened flat today. FI turned net buyers of equities, having purchased equities worth 40,870 crore thus so far in May 2025. DIIs remain net buyers of equities since the last 4 days. The rupee rose for the third straight session on Wednesday, aided by positive global and domestic cues. It opened weaker at 85.54 rupees per dollar today. Gold prices fell as growing optimism around trade talks and improved investor confidence, leading them to move away from safe haven assets like bullion. Oil prices slipped after government data revealed an unexpected increase in US crude stockpiles last week, raising investor concerns about oversupply. Now, having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.